What if I were to tell you that you are suddenly, as a real estate agent or mortgage person, going to find yourself in one of the absolute best places you could be, which is in this industry? Now, you may say, Rayce, I already know this is a great place to be, but let's face it, a lot of people that I work with that know have had a tough quarter or two with the way the market's been. There's been almost no refinances except for people that have to refinance. Demand has fallen, obviously, across the nation, and then with rates being so high, affordability has been low. So all of that has went, to impact the market. I'm going to lay out for you what I think is likely to happen going through this year and next year, which I think you're going to really like if you're in the mortgage or the real estate business. I think you're going to find yourself not only in a great place to be, but a very, very lucrative spot. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. If you have any questions on this or anything else, reach out to me. I'd love to help. So let's take a look at this article here from Redfin. Housing market update. Spring home buying season kicks off with steady demand, but lack of listings hold back sales. And I think if you're in the market right now, you realize that we've had more applications and contracts come in over the last couple of weeks. So we are getting into that selling spring and summer cycle that always comes. But there's really no inventory that's coming back onto the market meaningfully. When you look right here at sales, you can see the sales went up 1,674 up to 2,240, so that's great. But demand 4,152. Inventory falling. If you look at this kind of a 20-year history of the last few years, it's minus 846 in December of 2022 to minus 236. To minus 560 in February 2023, which means the inventory is falling, right? We're getting less inventory as demand picks up. Governor DeSantis just launched a bunch of money into the housing market. You're seeing across the nation, these states putting in more and more first-time homebuyer programs to help first-time homebuyers get a down payment and qualify, which is just going to put more demand on the table, where the issue is not the demand, it's the supply. And that's really the big issue going forward. So as we kind of go into this selling season, I think this next few months is going to turn pretty majorly into a seller's market, as again, I just don't see a lot of inventory popping on the market. So what did I say in the beginning is what would make us be all of a sudden finding ourselves in a really, really good spot? So if you look right here at Mortgage News Daily, this is where they did this overlay, which I thought was really interesting, on interest rates versus demand. And you can see as interest rates go down, that's in the orange, and the gray, mortgage applications go up, which makes a lot of sense. As rates go higher, you can see now all of a sudden the gray composite index there gets below this number, meaning demand is now falling, which kind of makes sense, right? So you've seen demand fall off a ton. If I zoom into a year here, look how fickle this is. So as rates jumped up here to over 7%, demand fell to really a super low. Then rates started falling, demand came back up, rates kept falling to almost 6%. And then look at that, the gray composite line went back over rates and demand really popped up, then went all the way back to 7 and or about 6.75, and then rates now are around about 6.32 to 6.5%. And then look how much demand dropped up. That is how correlated rates are to mortgage applications, which is not really sales, but people that want to buy a home. So in my opinion, interest rates are likely to continue to fall. I think, and I've been saying this in almost every video, faster than what a lot of people think. And as rates fall, that's going to drive more demand into the market, which could kind of be a bad thing if there's not going to be a fair amount of supply. Now, I will tell you, I did Taste of Oviedo recently. And we did a booth where we were given free temporary water tattoos. All the parents brought their kids up in Oviedo. A lot of them were homeowners. And I asked them, would you be interested in selling your home? And a lot of them said, yeah, but rates are too high, meaning, they got a 3% rate. Now, if they're going to get a 6 or 7% rate, that payment just doesn't make sense. But there's starting to get to be this pent up demand, in my opinion, of supply, which is the same thing that happened in COVID, where a lot of people weren't buying homes because of COVID and all the craziness. And I remember writing an article where I actually said there's so much pent-up demand that as soon as rates drop, which the Fed was likely to do, demand was going to get shot out like a cannon as far as across the nation about the amount of people that wanted to buy with low rates. I think the same thing is starting to happen to supply. The real question is, you have all these homeowners that would like to sell that don't need to sell, because there'll always be people buying and selling. But rates need to get to a certain point for them to making that decision. to get, more bedroom, an extra bedroom, a pool, all the things people, decide to move up for. So I did a little thought experiment. I looked at a payment of 3% on a 360 purchase price is just principal and interest. That payment's $1,518. If you move this to 7%, it goes up to $2,395, which is almost $900 more a month. But if I move this to 5%, it goes up to $933, which is about $330 more per month than what the person is paying now if they have a 3% rate. Why is that important? Because again, I think there's a lot of supply on the sideline that will come on if rates get below 5.5%, closer to 5%. Now, I don't know for sure, I'm making up that number, but the good news is rates are on their way down. Again, I think faster than people think. I think we could be at 5.5% by the end of the year. But what that sets up is a long normal market, and I don't even know what normal means anymore, but where you have sellers putting their houses on the market and buyers that want to buy them. I'm going to call that a normal market. And that's exciting if you're in the real estate and mortgage business, because I think that's going to be a long run of what we're going to call the new normal. Once we get rates under 5.5%, you're going to get inventory back online. You're going to get buyers that can buy homes, first-time home buyers, move-up buyers. I think it'll be a good mix. I think the next few months could be tough. I think there'll be plenty of transactions. I just think it will turn into, a very, very, seller's market where sellers are going to be in control again because, again, there's going to be all this demand come online, and I don't see inventory in the short term coming back into the market. Anyways, that's my thoughts on that. So I think we're in the right spot to be. I think the next few months will all do well. It's going to be a crazy market and crazy ride as there's not enough inventory to meet the demand. But I think we're in the right spot at the right time. So let me know what you think about this video. I'd love to know. With that, have a great day. Reach out to me for anything, and I'll talk to you soon. Bye-bye.